Welcome back. Now, over the last 3 months, you may have noticed that your take-home pay has diminished. According to the latest BankservAfrica take-home pay index, nominal average take-home pay slowed by 1.3% in May, marking the third consecutive month of decline. This due to depressed economic environment and weak global outlook. Independent Economist Elize Kruger joins us with greater perspective on the findings of the index. Elize, thanks so much for your time this afternoon. And we are seeing, a moderation in salaries this year, and this comes as no surprise, of course. As I mentioned, we are seeing, the local economic picture in particular really not looking good. Those mounting global tensions, geopolitical tensions in particular, also weighing. Talk to me about, how the global environment and local environment is just generally weighing on sentiment, and we are seeing that then filtering through to things like the take-home pay.
Good afternoon, Charlene. Yes, indeed, we have seen 2025 so far to be quite a volatile year. With the global shocks, as mentioned, the conflicts that are escalating, and also our local challenges still ongoing, it is starting to become a year where the economic environment is quite a bit less positive than initially thought.
Yeah.
We saw that in downward revisions to economic growth forecasts, both globally and locally. And I think that is what has been pressing on confidence levels and on uncertainty. And, as we know, that is not conducive to economic activity. And that is when you see companies really moving into a conservative mode in terms of employment and in terms of awarding good salary increases.
Meanwhile, on a year-on-year basis, figures look better. Is this mainly on the back of an improved local political picture, considering where we were in May 2024 and where we are now in May 2025?
Yes, I think that really speaks to the upward trend we've seen since middle of last year up till early this year. We've seen numbers increasing quite a bit, almost playing catch up after a couple of years of really dismal salary increases. So really the weakness that we've been talking about now is in the past 3 months, where we're starting to see the trend moving backwards, basically a U-turn starting to develop compared to the trend we've seen. But yes, indeed, you'll recall that we were quite optimistic about economic prospects. Middle last year, things could change, given the new political dispensation, a couple of tailwinds, from lower inflation and potential cuts in interest rates and so on, to the real increase in wages as well as a positive. That is still the case, I would say, for 2025, though, given that inflation remains at fairly low levels.
And talk to me about that inflation picture that remains, we have our inflation remaining below the SARB's 4.5% midpoint. Just how much of a cushion does this provide for households, as we've noted the slowdown taking place in take-home pay over the last 3 months?
Yes, I think in the short term we still have the benefit. With headline inflation sitting around 2.8% and slowly creeping up. However, there are some headwinds, appearing, especially relating to food prices, in particularly meat prices, but also the fuel price. So the big spike up in oil in the past week, I think, is a stark reminder of what could happen if the conflict in the Middle East would escalate even further. But even as it is, we will see further increases in fuel prices early in July, and potentially also in August. So that will result in our inflation numbers also creeping slightly higher than what we have hoped for. And, I'm talking an increase maybe from 3.2 to 3.6, so still positive. But into next year, the picture could be a bit less promising.
All right. And I'm sure that those upward risks to inflation going to be top of mind for the SARB when they meet next month. And that brings me to my next question then. With the risks that have come through over the past 2-3 weeks, are you now pricing in more pauses this year? Have you changed your outlook when it comes to rate cuts from the SARB?
Yes, in terms of timing, a day or 3 ago, when we were at the height of the spike up in the oil price, with oil currently, around like $78 per barrel, I did definitely, think about it, that I think the SARB would not cut if that is the case. And, but then we had a sudden reversal, as we see the volatility globally really, spiking up. So that reversal with oil prices now down to about $68 per barrel again, and the rand actually stronger again, has suddenly alleviated some of those pressures. But I do think if there's more volatility, the SARB might decide to sit on their hands again, looking at what could potentially be the impact. I think if we stayed at $78 per barrel for a prolonged period, say up till the MPC meeting, then I think it would have been probably a no-brainer that they would not cut at all. But I think, really we are data dependent on this scenario. I think there's scope if you look at the real interest rate, but then again, the risk that increased again compared to where we were. And that, as we know, could, sort of result in a pause rather.
And with that being said, with uncertainty really remaining the name of the game, Elize, what are your prospects for earnings then moving forward? Because I can imagine that it's a difficult environment for businesses, employers to navigate, and also just speaks to the jobs crisis that we currently have, because if the environment remains this way, we're not going to see more hiring taking place.
Yes, indeed. I think the first quarter employment stats, really brought that home with, drops both in the formal private sector and also in the broader sector, as reported on by the Labour Force survey. So quarter one already dismal, and we know we had very little growth in that quarter. So I think the year as a whole, with growth of only, say, 1% expected in South Africa, again, we're in the muddling along narrative that we're not growing enough to create jobs. So from that perspective, I think we're going to be in a year where there's conservatism with corporates, in terms of awarding salary increases, and definitely conservatism in terms of creating new employment opportunities. So we need a bit more clarity, I think a bit more certainty and confidence to return before we're going to start to really have a narrative that we can be optimistic about the jobs market.
All right, Elize, thanks so much for your time and just unpacking that index for us this afternoon. That was Independent Economist Elize Kruger with insights from the latest BankServ Take-Home Pay Index.